Welcome to the Bulls 2 Bears Insider Trading Podcast. Viewer discretion is advised.
Hello, welcome back to the Bulls to Bears Insider Trading Podcast, your premier source for mastering the art of stock and option trading. Whether you're an aspiring trader or a seasoned investor, our channel is tailored to provide you with essential knowledge and strategies to excel in today's dynamic world of stock trading. Our goal here is to empower you with actionable insights and practical tips that can help you navigate both bull and bear markets with confidence. So on today's podcast, we'll delve into market trends, industry shifts, and the forces that move the markets. I'm your host, Frank the Bull from Bulls to Bears, and in today's episode, it's all about exploring a topic that's becoming increasingly relevant, the impact that hydrogen vehicle stocks may have on electric vehicle stocks. So today we'll break down the challenges that EV stocks may face with the rise of hydrogen technology and examine the key players in the hydrogen space, including Tesla's stance, and consider what this means for investors and the automotive industry as a whole. So there's no doubt that electric vehicles have revolutionized the automotive industry. Companies like Tesla, Rivian, and NIO have been at the forefront, pushing the boundaries and capturing the imagination of investors. For the record, we isolated NIO stock early on and positioned our clients in it when the stock was trading at about $4, and we continued our position buying down to $2 before watching NIO stock skyrocket to $59, where we issued a sell on it. We call that a grand slam home run. We made some of our investors millionaires on that stock alone. Now, NIO stock is the only stock that we've had that has done extremely well. And for the record, we're always on the lookout for new stocks that can garner similar returns. So contact our office if you'd like and speak with one of our reps regarding some of our current contenders. On that note, I'll get back to my thesis on hydrogen vehicles. Now, as hydrogen vehicles begin to make more headlines, there's a growing speculation on how this emerging technology might disrupt the EV market. So today, we'll take a deep dive into this topic, examine both opportunities and the potential challenges that hydrogen vehicles present for EV stocks. Now, hydrogen vehicles operate differently from battery electric vehicles. Now, rather than relying on batteries charged from an external source, hydrogen vehicles use fuel cells that generate electricity on board. Now, these fuel cells convert hydrogen gas into electricity with water vapor as the only emission. Now, this process presents a unique set of benefits and challenges. So why is hydrogen technology generating so much interest? Let's explore some of the key advantages. First, number one, quick refueling. One of the most significant benefits of hydrogen vehicles is their fast refueling time. Now, while charging a battery from an electric vehicle could take anywhere from 30 minutes to several hours, filling up a hydrogen tank takes about 5 minutes. So this convenience could be a game changer for consumers accustomed to traditional gasoline fueling times. Two, longer driving range. Hydrogen vehicles offer a longer driving range compared to many battery electric vehicles. The driving range for EVs can range anywhere from 150 to 375 miles, while for hydrogen cars it ranges from 400 to 600 miles depending on the size of the gas tank, or hydrogen tank in this case. This extended range could make hydrogen cars an appealing option for long distance travel, potentially addressing one of the current biggest concerns and limitations of EVs. Number three, reduced battery degradation. Unlike batteries in electric vehicles, hydrogen fuel cells are not subject to loss over time. This results in a longer lifespan for a vehicle's powertrain, and it also reduces the maintenance costs substantially. So, despite these advantages, there are still some challenges associated with hydrogen vehicles. However, today we're going to focus on understanding the potential impact on EV stocks, so we're going to keep the discussion on its cons to a minimum. Now, the competitive landscape. Several major automotive companies are investing heavily in hydrogen technology, each with their own unique strategies and approaches. So let's take a look at some of the key players in the hydrogen vehicle space. First, Toyota. Toyota has been a trailblazer in hydrogen technology with its Toyota Mirai. Launched in 2014, the Mirai is one of the first commercially available hydrogen vehicles. Toyota's commitment to hydrogen technology is evident in their ongoing research and development efforts. The company is also investing in expanding the hydrogen refueling infrastructure, which is crucial for the widespread adaptation of this technology. Okay? But they're also fostering partnerships and initiatives to build a more extensive network of hydrogen refueling stations. This comprehensive strategy positions Toyota as a significant player in the hydrogen vehicle market. Then for the second, we have Honda. Honda has introduced the Clarity, adding to its portfolio of environmentally friendly vehicles. The Clarity is part of Honda's broader strategy to provide a wider range of cleaner transportation options. Honda's focus is on developing its reliable fuel cell technology and also supporting the infrastructure needed to make hydrogen vehicles more accessible to its customers. Then we have Hyundai. Hyundai has the Nexo. Okay, it represents their commitment to hydrogen technology. The Nexo is an SUV that showcases Hyundai's advancement in this technology. Hyundai is also actively involved in building a hydrogen infrastructure and forming partnerships to support the growth of the sector. Number 4, we have Mercedes-Benz. Mercedes has entered the hydrogen vehicle market with the GLC F-Cell. This vehicle is very interesting because it combines both hydrogen fuel cell technology with a plug-in battery. It's a hybrid, providing a solution that leverages both hydrogen and electric power. Now, Mercedes-Benz's strategy demonstrates their intent to offer versatile, high-performance vehicles while exploring various clean energy solutions. Last but not least, we have Tesla. Now, Tesla's not a fan of hydrogen technology. Elon Musk has been a vocal critic and has cited his concerns about the inefficiencies and high costs associated with hydrogen vehicles. As a result, Tesla's focus remains firmly on building a battery electric vehicle infrastructure. They have not announced any plans to develop hydrogen vehicles at the moment and continues to invest in battery technology and its expanding supercharger network. Now, Tesla's stance on hydrogen reflects its commitment to EV batteries, period. However, the evolving nature of hydrogen technology means that all players, including Tesla, will need to stay adaptable. Now, the challenges that hydrogen vehicles present for EV stocks. Number 1 is investment shifts. As hydrogen technology gains more momentum, there's a potential for investments to shift from battery EVs to hydrogen vehicles. Now, if hydrogen technology proves successful and starts capturing significant market share, investors might redirect their funds towards hydrogen-related initiatives. This shift could create volatility in EV stock prices and affect the overall market sentiment. Investors may be drawn to hydrogen technology, leading to changes in investment strategies and a potentially negative impact on EV stocks. Then we have market sentiment and stock valuations. Now, if hydrogen vehicles gain traction and proves to be a viable alternative to EV vehicles, the perceived growth potential of EVs might diminish significantly. Then we have competition. While hydrogen vehicles present competition, they could also drive innovation within the EV sector. Now, the challenge from the hydrogen technology may spur further advancements in better battery technology, leading to improvements in energy density, charging speeds, and the overall vehicle performance. Vehicle performance is pretty good as it is currently. Increased competition can also lead to technological breakthroughs that will benefit both consumers and investors. Then we have policy and regulation influence. Governmental policies and initiatives play a huge role in shaping the future of either hydrogen or EV vehicles. More support for one or the other can impact the growth of either sector. So monitoring government policies and regulatory developments will be essential for understanding how it will impact the balance between hydrogen and EVs. Now, these policies can significantly influence market dynamics one way or the other and investor sentiment. So the future outlook. The competition between hydrogen and electric vehicles will likely continue to evolve. Both hydrogen and EVs technically are advancing rapidly. Breakthroughs in fuel cell efficiency and hydrogen production and battery technology could shift dynamics in either direction. Now, innovations that address current limitations could make hydrogen vehicles more competitive and impact the growth of battery-operated vehicles. So staying informed about technological advancements and their implications will be critical for investors and industry shareholders. So the interplay between hydrogen and electric technologies will shape the future of the automotive market. Bottom line. It's possible that hydrogen and electric vehicles will coexist and serve different market segments. Hydrogen vehicles might excel in applications requiring quicker refueling and long-range driving, while EVs could dominate urban and short-distance travel. Understanding how these segments develop will be important for investors going forward, looking to identify growth opportunities. Plus, we have consumer preference. It will play a significant role in determining the success of hydrogen vehicles as well. Factors such as refueling, convenience, vehicle range, and overall costs will influence whether consumers lean towards one or the other. Automakers will need to adapt to these preferences to remain competitive for the long haul. So, the future of hydrogen and electric vehicles will be shaped by a combination of technical advancements, consumer preferences, and environmental considerations. Keeping an eye on these factors will help investors navigate the evolving automotive landscape. So, to summarize all of this, the emergence of hydrogen vehicles presents both opportunities and challenges for EV stocks. The competition between hydrogen and EV vehicles will drive innovation and shape the future of the automotive industry, as I stated. As investors, it's essential for us to stay informed about these developments and consider how they may impact your portfolio. If you're looking to invest in hydrogen stocks, I might suggest you contact us to find our #1 hydrogen stock we isolated in anticipation of future returns. Thank you for joining us on this episode of Bulls to Bears TV for this in-depth analysis. If you found today's discussion valuable, please subscribe to our channel, leave us a review, or share this episode with a fellow investor. Until next time, stay informed, stay strategic, and keep your investment game strong. Thanks for listening to this episode of the Bulls to Bears Insider Trading Podcast. Again, I'm your host, Frank the Bull. Drive safe, invest wisely, and we'll see you next time. Have a great long weekend and happy trading, everyone.